afternoon, everyone, and welcome to Stock Market Today for Thursday, February 6th. It's Alissa Coram here. We had a mildly mixed day, blue chips and small caps pausing ahead of Friday's jobs report. And we've got more earnings out after the close that we'll check in on. Joining me now to break it all down, make sense of it all, is my colleague, Ken Shreve. Ken, it's great to see you.
You too, Allie, in light of a pretty decent earnings report from Hilton. Let's take a look at Marriott, MAR, which reports earnings next week. Also, Charles Schwab, growth expected to kick back into gear here, setting up in a nice base. And finally, also in the financial sector, because we're still seeing a lot of strength in financial stocks, let's take a look at mid-cap Houlihan Lokey in the investment banking group. HLI is the symbol there.
Okay, well, we'll take a look at those interesting stocks. But first, let's take a closer look at the major indexes. The Nasdaq led the way today with a gain of about a 0.5% here, Ken. Meanwhile, the S&P 500 up 0.4% on the day. And pausing the Dow today down about 0.3%, and the Russell 2000 small cap index down about a 0.5%. So that pesky 50-day line, still an area of resistance there. Ken, your thoughts on the broad market action?
Well, we mentioned in yesterday's video the fact that stocks have been kind of rallying off lows into the close, and they did the exact same thing today for the fourth straight session. So, close up near highs. There does seem to be growing confidence that a soft landing is in store for the economy this year. Still some questions about that, but just looking at the way the market is trading here, up near all-time highs, seeing a lot of strength in consumer stocks. I
Mhm.
think the market's just pretty comfortable about the Fed engineering a soft landing here. So encouraged to see stocks rally off lows again.
Well, we'll have to see how confident and encouraged they feel after the jobs report tomorrow, huh, Ken? See if
Yeah,
that changes
yeah.
anything.
Yeah, most definitely. I mean, we had a huge jobs report about a month ago when the economy created a whopping 256,000 jobs. That resulted in some pretty good selling in the major stock indexes. So that may have been at back 4 weeks ago when good news was bad news for the market. So
Mm.
we'll see this time around. Payroll is expected to be up 168,000 in January. Market probably just wants to see an inline number, maybe a little better than expected. So we'll see what the market reaction is. But again, four constructive sessions in a row where we're up near highs, and buyers definitely exerting their influence.
Absolutely. So still in these sideways ranges, but as you mentioned, closing in on those prior highs for the S&P, and the same case here for the Nasdaq. So we're still keeping a very close eye on that 20,000 level to the upside to see if we can break out of this sideways range. Seen a lot of volatility lately, Ken.
Yeah, that's a big round number that the Nasdaq is dealing with. So we'll see what the numbers look like tomorrow. But as we've been talking about, the action in individual growth stocks generally has been pretty strong. It seems like every day there's new bases that are yielding technical breakouts to new highs, and we saw more of it today. So this is encouraging, but yeah, we'll just have to see how the market reacts tomorrow.
Yeah. And when it comes to economic news, investors are really dialed into what the 10-year treasury is doing as sort of a signal there for the bond market. And some headlines I saw today, Trump appointee Scott Bessent saying he's very tuned into the 10-year yield, wants to bring that down. Ken, your thoughts on where we stand with the 10-year yield?
Well, I mean, it's been a tremendous move off lows after it hit that low of 3.6% back in mid-September. So we're seeing a pullback in bond yields, and again, the 50-day moving average here, the 10-year yield fell below that. So they've come under pressure. Hasn't Yields under pressure hasn't been a whole lot of help to small caps. So some bond buying has push yields lower, and we'll likely see some movement in bond yields tomorrow based on the market's reaction to the jobs report.
All right. Thoughts on blue chips, Ken?
Top performing index year to date, up more than 5%. It's beating all the other major stock indexes. Index was under a little pressure today. We had a earnings sell off for Honeywell. Also, some selling in Techland. We saw Salesforce, relatively new Dow component, break below its 50-day moving average. So that was a sign of technical weakness. And then IBM as well really had a nice response to earnings not that long ago. That was under some pressure today as well, but you can see a big, bullish gap up last week. But IBM and the Dow down about 3.7% today. So, some sharp decliners in the Dow that caused the blue chip index to lag a little bit, but it ended up being just a modest decline for the Dow.
Yeah, and you and I both briefly mentioned small caps, but we'll just take a look at the visual representation here on the chart briefly. This could be one of the indexes that gets a little bit more movement tomorrow, depending on that economic news potentially.
Yeah, and as we mentioned yesterday, so it wouldn't take much to break the IWM out of a downtrend here. It actually tried to earlier in the session, but like you said, it kind of met some selling pressure at that 50-day moving average, and that can happen when you get a bad break, like what
Hmm.
happened with the Russell back in December when it plunged through the 50-day moving average. Spent some time underneath it. Now it's trying to recover it, but getting some resistance. So small caps do have some overhead supply to work through here, but again, positive reaction to the jobs report. We could easily see, a breakout from a downtrend here.
Okay, let's take a look at the energy space first. USO, this is a proxy for the price of oil after hitting a multi-month high in mid-January. We are now in a shorter term downtrend here, now back to where we were at the end of last year, Ken.
Pretty sharp pullback here. The USO rallied up close to the 85 level. It's been under a lot of pressure, and why? There's several reasons. I mean, you still have a consumer in China that has been slow to recover, and an overall economy in China that's been slow to recover. Obviously, they're big buyers of oil and typically drive the demand picture. So, Chinese economy still soft, but again, you have a U.S. economy where demand, should be pretty good. We've got decent GDP. Again, the prospects for a soft landing where growth slows, but not enough to put the economy in a recession. So oil's been under a lot of pressure. I think it's noteworthy. We'll see if USO can firm up at this major support level here, just above 75.
Okay, and let's take a look at XLE. This represents the energy sector. Two big weightings here, of course, as we know, Chevron and Exxon in this ETF, but definitely underperforming today and really since the start of the year, essentially, but down 1.8% today amid this energy sector weakness here.
Yeah, it was the worst performing S&P 500 sector today out of the 11 sectors tracked by S&P. And yeah, just classic resistance at the 200-day moving average here. Tried to pop above that 90 level and got turned away in pretty heavy volume. So this XLE still looks a bit broken here.
Okay. Well, let's turn our attention to one compelling looking chart out of the travel and leisure area, and that is Marriott. A powerful breakout today for the hotel chain, up 3.6% today, breaking out of a base, up with volume here, Ken. The only trouble, we've got earnings coming up next week.
Yeah, I just wanted to, talk about some of these consumer stocks because there are so many, acting well in the market. And again, that's just another vote of confidence that we could have a decent year for stocks if this soft landing scenario plays out. I mentioned that competitor and group peer Hilton had a favorable response to earnings today. They were talking about strong demand for business travel and generally good news. Still some weakness in the low to middle class traveler. as they're become much more discretionary on spending. But Hilton cited strong business travel and a good breakout. So we'll see what Marriott has to say
Mhm.
next week. But this was a nice clean breakout from a sideways consolidation after Marriott hit that high of
Yeah.
295.45, and nice breakout today. Just followed Hilton higher.
Yeah, I definitely move in sympathy here. And I guess, for those who are saying, well, why is she, sounding a little Debbie Downer about this breakout? Well, for those who are less familiar with our strategy, we do like buying breakouts, we do like buying strength. But we also like to manage our risk with a trade. So when you have a company with earnings in less than a week, that's really not a ton of time to get a profit cushion, so it just makes it more a buy that much closer to earnings, that much more risky, Ken.
Yeah, no doubt about it. But we do want to just point out areas of strength in the market when we see them. So
Absolutely.
Marriott could rally into the report
It very
and then
well
sell the
could.
news. We've certainly seen that
Yeah.
happen. But just a good example of a technical breakout here. You could consider a call option trade because Marriott is showing a lot of relative strength in this market. I mean, compared to the S&P 500. Look at that relative strength line pointing up
Mhm.
into new high ground. So an option trade with a strike around the 300 price level probably would be a relatively cheap trade. So that's another way to play the earnings front. But
Yeah.
good to see. The hotel operators rising in a group today.
Yeah. Good points there, Ken. Okay, let's also take a look at Schwab. We've been talking about a number of stocks out of the financial sector that are looking interesting. Schwab among them, seeing momentum since its recent earnings report and now breaking out of a base of its own, up 2.2% today.
Yeah, so I wanted to talk about Schwab. It's hard to believe it's been about 4 years since the company closed its acquisition of TD Ameritrade. But this is an interesting setup here. If we go to the weekly chart and just look down in the fundamental area, I like the fact that growth is really expected to ramp up in coming quarters, and this is after a period of declining earnings, very sluggish revenue growth. You can see in the first, second, third quarter of this year. Um, Revenue when they reported fourth quarter results was up 6%, but you can see that rate of growth is really expected to increase in coming quarters. So, like the setup here, and when you have money, going into financial stocks, let's switch back to the daily chart here, and we can see that Charles Schwab is right on the cusp of a breakout. You see a day like today where the stock's up 2%. Volume didn't come into the stock, but this could end up being a setup day. So we'll go ahead and put Charles Schwab on breakout watch and see if it can clear this cup base. It still has a pretty healthy market working in its favor.
Sounds like a plan. Let's also check out Houlihan Lokey in the finance sector. This is a really interesting looking cup with handle here, up 2.2% on the day. Not above average volume here either, but I think compelling price action and potentially even an early entry that some traders decided to act on.
Yeah, maybe another setup day today, up 2%, closed just below. This is at what we would call a handle buy point. So it's a cup with handle base. You see it hit that high of 188.36, started to drift lower, and now it's threatening a breakout over this 188.36 level. This is a mid cap stock. Houlihan Lokey, maybe not a major investment bank that people have heard of, but market cap of 13 billion. So that firmly puts the stock in mid cap status. And when you look down at the bottom, the last 4 quarters of earnings and revenue, really solid, consistent growth, and that growth is expected to continue. So. Like the look of the weekly chart here, and again, a company showing good growth, not widely known, in a good setup here with a relative strength line near new highs. So uh, again, financials continue to be a pocket of strength. When you look at the S&P 500's best performing sectors today, once again XLF was right up near the top. So not a bad idea looking in this sector for ideas.
Okay. And now we can take a look at Amazon and Fortinet post earnings, huh, Ken?
Yes, yes, we were a little early to the game yesterday, but now this is off lows.
Amazon, that is, for our
Yeah,
Spotify
Amazon.
listeners.
Yeah, it was. Amazon was down 3 or 4%. It has paired losses, as our news editor Ed Carson brought up today. You know, we had a couple of companies recently, Microsoft and also Alphabet, that reported strong cloud growth in their data center. You know, basically their web services. And I think growth at Amazon also slowed. That could be weighing on the stocks. I haven't had a chance to go over the report yet, but seems to be a fairly stocks down just a little bit. But we'll have to go through the report and see what everything said. The revenue was just slightly ahead of expectations as well. It wasn't a big beat by any means.
Okay. So down about 2% right now. We'll have to see what they say on the call. And then let's check out Fortinet in the security software group. Looks like investors are happy about this report, at least the initial reaction here. Shares up 8%.
Yes, another company past a couple of quarters, revenue growth, not huge, but it has been picking up the pace, some nice acceleration. And here again, a stock that had been rallying ahead of earnings, so wouldn't be surprised to see a sell the news situation. But obviously, the numbers are pretty good here. Seeing the stock hold a solid 8% gain. You can see it was sitting right at the top of the 5% buy zone headed into earnings. So probably a little bit extended, but
Mhm.
looks to be a positive response here.
Okay. Yeah. Climbing. Now we'll have to see if we can hold a 10% gain headed in tomorrow's regular session and what kind of action we see in the regular session on Friday. Of course, after hours action, not always indicative of what translates to the following day. So it'll be a fun one to watch tomorrow.
Yes, indeed. Yes, indeed. We'll watch Amazon and Fortinet, and I think that was it. Oh, another company we could check on. Cloudflare has been a big winner in the technology sector. NET is the symbol there. Boy, another stock that is just up near highs, rallying, and now up another 4%. Looks like on pretty strong numbers. Look at the growth along the bottom there. Very um, fundamentally strong stock as well.
Absolutely. All right. Well, thank you so much, Ken, as always, for sharing your thoughts with us. We appreciate
Of
it.
course, appreciate it.
And thanks everyone for tuning in. That is it from us for today, but we'll be back with more tomorrow morning on IBD Live, investors.com/IBD Live for all the details on that. We'll see you there. And then we'll also see you right back here tomorrow to wrap up the week.